Cryptocurrency. Get rich or get broke overnight. A digital or virtual currency that uses cryptography for secure transactions and operates independently of a central authority. It is typically decentralized and based on blockchain technology. Blockchain, a decentralized, distributed ledger technology that records transactions across multiple computers in a way that is transparent, secure, and resistant to tampering, often used as the underlying technology for cryptocurrencies. Bitcoin, the first and most well-known cryptocurrency, introduced in 2009 by an unknown person or group of people using the pseudonym Satoshi Nakamoto, operating on a decentralized network without the need for intermediaries like banks. Ethereum, the second most well-known crypto platform, enables the creation of smart contracts and decentralized applications, DApps, using blockchain technology. Its native cryptocurrency is called Ether or ETH. Altcoin, short for alternative coin, refers to any cryptocurrency other than Bitcoin, encompassing a wide range of digital currencies that emerged after Bitcoin's success, each with its own unique features, use cases, and underlying technology. Wallet, software or hardware that stores cryptographic keys used to access and manage cryptocurrencies, enabling users to send, receive, and store digital assets securely. Exchange, platforms where cryptocurrencies or other digital assets can be traded, bought, and sold. Mining, the process of validating and adding new transactions to a blockchain, typically performed by specialized computers, miners, that compete to solve complex mathematical puzzles in exchange for rewards in the form of newly created cryptocurrency and transaction fees. Decentralization, the distribution of power, control, and decision-making authority away from a central authority or single entity, often associated with cryptocurrencies and blockchain technology, aiming to eliminate single points of failure and increase transparency and resilience. Token, a digital asset issued and managed on a blockchain, representing ownership rights, access to services, or participation in a network. While there is no technical difference between cryptocurrency and token, within the crypto industry, there are differences. Cryptocurrencies like Bitcoin are usually assets that mostly serve as money-like instruments. Tokens can be used like money, but they usually have additional functionality, with various types such as utility tokens, security tokens, governance right tokens, UNI, and non-fungible tokens, NFTs. NFT stands for non-fungible token. It's a digital asset that represents ownership or proof of authenticity of a unique item or piece of content using blockchain technology. Unlike cryptocurrencies such as Bitcoin or Ethereum, NFTs are not interchangeable. Each one is distinct and cannot be replicated. They've gained popularity in art, collectibles, and digital media, allowing creators to sell and buyers to own unique digital items with verified ownership and provenance. ICO, Initial Coin Offering, an event in which a new cryptocurrency project sells digital tokens to early investors in exchange for funding, often conducted before the project's product or service is fully developed. FOMO, fear of missing out. The fear of missing out on potential profits or opportunities, leading individuals to make impulsive decisions, particularly in volatile markets like cryptocurrency, influenced by the fear of regret. FUD, fear, uncertainty, doubt. A tactic used to spread negative or misleading information about a particular cryptocurrency or market, creating fear, uncertainty, and doubt among investors to manipulate prices or sentiment. HODL, a misspelling of hold originating from a Bitcoin forum post in 2013, referring to the strategy of holding on to cryptocurrency assets instead of selling, often despite market fluctuations, with the belief that their value will increase over time. Satoshi, the smallest unit of Bitcoin, named after Bitcoin's pseudonymous creator, Satoshi Nakamoto, equal to 100 millionth of a Bitcoin, 0.00000001 BTC. Smart contract, self-executing contracts with the terms of the agreement directly written into code, automatically enforcing and executing predefined actions when specific conditions are met, often deployed on blockchain platforms like Ethereum. Gas, Ethereum, a unit representing the computational cost required to execute operations or smart contracts on the Ethereum blockchain, paid in Ether, ETH, by users to incentivize miners and ensure efficient network operation. Fiat currency. Legal tender issued by a government, not backed by a physical commodity like gold or silver, but by the issuing authority's guarantee, such as the US dollar or Japanese yen. Market cap, short for market capitalization, the total value of a cryptocurrency or company calculated by multiplying its current price by the total number of outstanding coins or shares, indicating its relative size and importance in the market. Pump and dump, a fraudulent scheme in which the price of a cryptocurrency is artificially inflated, pumped, by spreading positive hype and misleading information, followed by the orchestrated selling, dumping, of assets at a profit, often leaving unsuspecting investors with losses. Whale, a term used to describe an individual or entity that holds a large amount of cryptocurrency, capable of significantly influencing market prices due to their substantial holdings. Bull market, a market condition characterized by rising prices, investor optimism, and overall positive sentiment, typically leading to increased buying activity and upward price trends. Bear market, a market condition characterized by falling prices, investor pessimism, and overall negative sentiment, typically leading to increased selling activity and downward price trends. ATL, all-time high. The highest price level ever reached by a cryptocurrency or asset since its inception, often used as a reference point to gauge price performance over time. ATL, all-time low. The lowest price level ever reached by a cryptocurrency or asset since its inception, representing the lowest point in its price history. DYOR, do your own research. An acronym emphasizing the importance of conducting thorough research and due diligence before making investment decisions, encouraging investors to rely on their own analysis rather than solely on others' opinions or advice. TA, technical analysis. A method of analyzing and forecasting cryptocurrency price movements based on historical price data, trading volume, and other market indicators, often used to identify trends, support and resistance levels, and potential entry or exit points. FA, fundamental analysis. A method of evaluating the intrinsic value of a cryptocurrency or asset based on its underlying fundamentals, including factors such as technology, team, use case, adoption, and market demand, to assess its long-term viability and potential for growth. Cold storage, a method of storing cryptocurrencies offline, typically on hardware devices or paper wallets, to enhance security by keeping private keys away from internet-connected devices and potential online threats. Hot wallet, a cryptocurrency wallet connected to the internet and actively used for transactions, providing convenient access to funds for trading or spending, but posing higher security risks compared to cold storage. DApp, decentralized application. An application that runs on a decentralized network, typically built on blockchain technology, with no central authority controlling its operation, data storage, or transaction processing. DAO, Decentralized Autonomous Organization, an organization governed by smart contracts and run on blockchain technology, enabling members to make decisions collectively through voting mechanisms without the need for traditional hierarchical structures. POW, proof of work, a consensus mechanism used in blockchain networks, such as Bitcoin, where miners compete to solve complex mathematical puzzles to validate transactions and create new blocks, requiring significant computational power and energy consumption. POS, proof of stake, a consensus mechanism used in blockchain networks, where validators are chosen to create and validate new blocks based on the amount of cryptocurrency they hold and are willing to stake as collateral, reducing energy consumption compared to POW. Consensus, the process by which participants in a blockchain network agree on the validity of transactions and the state of the ledger, achieved through various consensus mechanisms like POW, POS, or others. Halving, an event in which the block reward for miners in a cryptocurrency network is reduced by half, typically occurring at regular intervals and designed to control the inflation rate and adjust the supply of new coins entering circulation. Fork, a divergence or split in the blockchain's protocol that results in two or more separate versions of the blockchain, often due to disagreements among developers or changes in the consensus rules. Hard fork, a type of fork that introduces significant changes to the protocol, resulting in a permanent divergence from the original blockchain, requiring all nodes to upgrade to the new version to continue participating in the network. Soft fork, a type of fork that introduces backward-compatible changes to the protocol, allowing nodes that have not upgraded to the new version to continue validating transactions, typically resulting in a temporary divergence that resolves once a majority of the network adopts the new rules. White paper, a formal document outlining the technical specifications, objectives, and methodology of a cryptocurrency project or blockchain platform, typically published by its founders to provide detailed information to potential investors and users. Sharding, a scaling solution for blockchain networks that involves dividing the network into smaller, more manageable parts called shards, allowing for parallel processing of transactions and improved scalability without compromising security. Scaling, the process of increasing the capacity and performance of a blockchain network to handle a higher volume of transactions, typically achieved through various technological upgrades, optimizations, and scalability solutions. Hashrate, a measure of the computational power or processing capacity of a blockchain network, typically expressed in hashes per second, HS, representing the number of cryptographic calculations performed by miners to validate transactions and create new blocks. Node, a computer or device connected to a blockchain network that participates in the validation and propagation of transactions, storing a copy of the blockchain's ledger, and helping to maintain the network's security and decentralization. Confirmation, the process of validating and adding a transaction to a block on the blockchain, typically requiring consensus from a majority of nodes in the network to ensure its authenticity and prevent double spending. Private key, a cryptographic key used to access and control ownership of cryptocurrency assets stored in a wallet, allowing users to sign transactions and prove ownership of their funds, with the responsibility of keeping it secure and confidential to prevent unauthorized access.